And I want to bring in, we used to call him Mr. Super Bowl. I think he still is. His name is Michael Lee, and he joins us now. Look, Michael, wait a second. We've got a slowing economy, and we've got inflation of around 5%. And at the very same time, we now have the Democrats proposing to spend $1.7 trillion over 10 years and tax $2 trillion extra. What impact on the market?
Well, we'll see if this we'll see if this goes through.
Sure.
The markets aren't really pricing that in. You haven't quite seen that in the bond market, but look, the equity markets are incredibly resilient at the moment. The sell-off, the bounce back from the sell-off induced by Chairman Powell's last words was a sight to be seen. And I think you have $4.5 trillion in money markets right now, a savings rate that's close to 10%, and $1.1 trillion in announced stock buyback. So look, this equity market can keep going a lot higher than many people think.
The consensus for all the people that I speak to and appear on this program, the consensus seems to be we'll keep going higher for stock prices this year, but it's next year when we're hit with a downturn. Are you broadly in line with that?
No. Look, something needs to happen for the market to have a major correction or for us to have a big negative year. At some point, what's going to happen is you're going to have a year like 2018, 2015, 2011, where the market is volatile, but it may be negative, but 1 or 2% where value, stock prices essentially catch up to their valuation or earnings catch up, and you have kind of massive multiple contraction. And yes, growth is slowing off the lows of last year, but there's still a lot going on. Consumer demand is at an all-time high. And just one thing to challenge that, what if these supply chains get fixed faster than the consensus expectation? And what if oil prices drop or stop rising as fast as they are? There's a lot of good things that can happen, but I'd say unless a major negative catalyst comes along, I wouldn't expect a meaningful sell-off at any point in the near future.
Okay, Michael, you spelled it out correctly, and we appreciate that. Thanks for being with us, and we'll see you again soon. Now, we've got, about 20